For more on the cryptocurrency market and the regulatory environment, we're joined by Kristen Smith, Executive Director of the Blockchain Association, and Anthony Pompliano, Pomp Investments founder and partner. I'm going to start. I haven't seen you in a while, Anthony. Let me just ask you, you have noted some underlying things happening in the Bitcoin arena in the last month or so. Things like on Twitter, negative sentiment versus what was really going on underneath. Can you explain why you saw some things indicated? I mean, it bounced from what, 28,000? And 28 to 50 is a pretty big move, is it not?
Yeah, I think what's happening right now is folks are focused on the narrative, but in the Bitcoin and cryptocurrency world, there's something called on-chain metrics that just tell you what's happening. It's actually visible on a public ledger. There's a whole new industry popping up, folks like Will Clemente, Dylan LeClaire, Willie Wu, David Puel, et cetera. And what those on-chain metrics have showed us is that nearly 70% of Bitcoin is being held right now by long-term holders. Over 80% of Bitcoin, if you account for lost coins in circulation, are being held by those long-term holders. The last time that happened, we saw about a 500% move upwards. And when you go through those on-chain metrics, you can see that realized cap, hash rate bouncing back, et cetera, it is very, very bullish. And ultimately, it's manifesting itself in this kind of supply squeeze thesis. So I think that through the rest of this year, we are going to see some wild price action to the upside.
Kristen, it almost seems like when we get more sort of clarity on what regulators are thinking, that that crypto starts trading higher. Maybe it's just a risk-on trade. We see that too, and the Fed certainly helps. But people would like to know if they're going to at least let it survive and then have ways of regulating it. I mean, that might be bullish for the space.
Yeah, I think what we saw in the Senate, what played out in the Senate over the past couple of weeks, is that there still is some uncertainty around how regulations are going to play out. But what we did discover is that crypto has a political superpower, and that is its community of users who, in a moment's notice, can activate and organize and weigh in with their policymakers. And I think the fact that there was a pay for in the package that relied on getting revenue from cryptocurrency at a very high level, that's a very, very good sign. Now, we still need to work on the details, but being on the ground in Washington, I've never seen the crypto industry or the crypto community more organized. And so at least from the US perspective, I think that we still have some work to do, but that we're going to ultimately get a good outcome on the regulatory front.
Anthony, I thought you wrote a really interesting piece. And we should know it. I mean, so many Wall Streeters that I know are following your work is kind of the way to watch what's happening in the crypto space. But your points about Western Union vis-a-vis the events in Afghanistan, what the Lightning Network's trying to do with Bitcoin. I mean, what would you tell people who are invested in the traditional sort of money transfer firms? How quickly do you think that their market share could be eroded or replaced by what Bitcoin Network is trying to do?
Yeah, I mean, it's simple. Get out and get away. I don't know what the time frame is, but when you look at something like Bitcoin, it allows through the Lightning Network for anyone to send pennies, literally pennies, anywhere in the world completely for free with instantaneous settlement. I'm an investor in a company called Strike. They literally can stream payments instantaneously, completely for free. And so when you start to look at something like what happened in Afghanistan with Western Union, at the time of need of literally millions of people, they pulled out of the country. They stopped supporting it, and they blamed it on kind of agent capacity. Whether that's true or not, I'm not sure. But what I do know is that Bitcoin brings a censorship-resistant program or network to the world. And I think what we're watching is young people specifically recognize the technical superiority. They are used to these digitally native platforms, and they're starting to shift. And so over a long period of time, those legacy payment systems are in a lot of trouble. And so they're going to have to choose. Do we go ahead and embrace this and adopt it and disrupt ourselves? Or do we sit here, take it on the chin, and likely get disrupted by this new technology? And I tend to bet that Bitcoin and the cryptocurrency world is going to win in that battle.
Bitcoin surging, trading at its highest level in more than 3 months. Our Kate Rooney is tracking all of those moves. Kate.
Hey, David. Good morning. Bitcoin hasn't seen that $50,000 price tag since about mid-May. It is still above that level this morning, continuing a rebound that really started at the end of July. Analysts have pointed to the $50,000 mark as a key psychological and resistance level. It is still off the highs, though, of more than 60,000 back in April. Other major digital coins this morning are also higher, coming off the weekend. Ether, the second largest, is above 3,300 this morning as well. And as far as what's driving it, guys, the rally started overnight in Asia, and there have been a couple of bullish announcements in recent days that appear to be helping prices here. First, Coinbase saying that it would add another $500 million in crypto to its balance sheet. It's also allocating about 10% of profits to a crypto assets portfolio as well. And we had PayPal announcing it plans to expand a service that lets people buy and sell cryptocurrencies to the United Kingdom. It now has that in the U.S. It's expanding abroad. And the value of the entire cryptocurrency market cap is now back above $2 trillion. It's around $2.2 trillion as of this morning. Guys, we also have some new data from our CNBC survey out this morning showing that new investors are significantly more bullish when it comes to cryptocurrencies. This is according to a new Invest in You Next Gen survey. It was conducted by CNBC and Momentive. New American investors, so those who got into the markets in 2020 or later, are more than twice as likely to own cryptocurrencies. That's compared to more experienced investors. And more than a third of that group believes that Bitcoin prices will go higher into the end of this year, compared to about a quarter of the larger investing base. Guys, back to you.
Always the optimists there. Kate, quick question for you. There was a journal piece over the weekend talking about the great mining migration, with a lot of the miners leaving China as a result of some recent regulatory crackdown there. How is that impacting the supply of Bitcoin in particular? Is that kind of changing the pricing dynamic as well?
It has changed the price dynamic. We saw that kind of start a couple of months ago, and we've had miners migrate to states like Texas and Wyoming, where we've done some reporting. But it does change the level of difficulty that it takes to mine a Bitcoin. So in terms of prices, the Bitcoin miners, it doesn't change the Bitcoin price much. It changes more the economics for the Bitcoin mining companies. So it's more lucrative to mine Bitcoin, but analysts tell me that it doesn't have as much of an effect on the day-to-day prices. So, but those miners, though, benefiting from less demand and less competition when it comes to Bitcoin mining.